Hello, everyone, and welcome to It's Not Too Late to Save on Your Taxes, sponsored by Riz Media and Intuit. I am super excited to be with you here today. Let's unveil the importance of understanding real estate accounting and preparing your finances and documentation for the best tax preparation situation that you can go ahead and set yourself up for this year, but more importantly, just going forward for all future years. So let's talk about that. So what are we going to cover today? We're going to cover breaking down the real estate accounting topic, preparing for taxes right, and then we're going to go ahead and give a bonus round, and we're going to talk about if you need to catch up on your accounting, what do you need to do that, catch up on a whole year of accounting, and then we're just going to give you a quick slide at the very end on some top tax deductions for real estate professionals. Let's get started first with what is real estate accounting. Why are we having an entire topic on real estate accounting? And let me go ahead and share why. The reason why is because we need to do accounting for our businesses. It's really important to do accounting for our businesses, but real estate accounting, it's a whole another animal. There are general accounting practices for businesses, and then there are specific accounting for real estate industries and real estate profiles. So we're going to cover that. Now, when you're learning about real estate accounting, you're going to see and you're going to learn and find out that there's bookkeepers, financial professionals, tax professionals that have decided to focus in this specific industry. And because of that, they have additional skill sets. For instance, they know how to recognize the different real estate profiles. They've learned the specific accounting terms and tasks. They can organize and prepare financial reports specifically for real estate transactions like purchases and sales and escrows and posting and reading the settlement statements and organizing, when there's multiple properties and whether that person is investing in those properties or flipping those properties. So many things that you need to know if you are focusing in the real estate accounting area. But let me tell you all something. Great if you can find a team and a partner and an accountant and tax pro that knows this, but guess who needs to know this more than anybody else? All of you. You all need to know this really, really well, because the person that is running that business, the person that gets up every day and sweats and, wakes up and goes to sleep and thinks about this and dreams about this or has nightmares about this is all of you. You need to understand real estate accounting and really become financially literate in this area. And that's why, again, I'm just super excited to have all of you here. So let's start with some differences about real estate accounting. So first, let's talk about learning the bookkeeping basics around real estate accounting. So there are bookkeeping basics in general, which we'll cover in a minute, and then there are bookkeeping basics that are specific to real estate accounting. For instance, how does money flow in and out based on a real estate profile? We're going to talk about profiles in a minute. Also, how do you report specific transactions based on specific real estate profiles? So if you're an investor, you may have to report it one way, and if you're a flipper dealer, you have to report it another way. How do you set up the chart of accounts for a specific real estate profile? Very, very different. A real estate agent may have much more simpler chart of accounts. That's their list of all the categories of their income and expenses, but an investor may have more a comprehensive one, and a flipper may have even more accounts than an investor has. So it's really important that you understand that the setting up, the initial framework of setting up your accounting, your solutions, your list, your categories, your chart of accounts, it's all based on your real estate profile. So we need to know and we need to recognize and identify with our real estate profiles. Also, the documentation and record keeping is also very different when it comes to real estate accounting. Now, after you know the bookkeeping basics, guess what, ladies and gentlemen? You also need to learn the tax preparation basics. Yes, I'm not saying you need to go ahead and learn taxes or be a tax preparer, but you are signing on the dotted line. You are stating that everything on your tax returns are correct. So you do need to understand the tax preparation behind the numbers. For instance, the tax implications of being one real estate profile over the other, the tax forms that you would file as a real estate business owner, how to report and when to report specific items on your tax returns, which businesses qualify for specific deductions or for specific credits? And do they all qualify at the same time? Absolutely not. You may need to report expenses differently as an investor versus as a flipper dealer. So we want to make sure you're all aware of that. Now, what's the same about real estate accounting? Now, this is all businesses need to know these things. They first need to know how the books to tax life cycle works. And so the books to tax life cycle is essentially the full life cycle of your business when it comes to all the accounting tasks, all the way till when you have to prepare a tax return. What does that look like? You have to track your income statement items, items that are income, items that are expenses. You need to track your balance sheet items, your assets, your liabilities, and your equity. You need to comply with accounting and tax deadlines. Everybody does. It doesn't matter what industry you're in. Everyone needs to comply with accounting and tax deadlines. You need to be able to project your income so that way you can pay your taxes and stay compliant with your taxes. You want to organize your documents so you have easy access, because especially when you get more complex, when you are an investor or your dealer, you have so many documents you need to file away. And so what is the best way to organize those so that way you are not completely overwhelmed? Take advantage of technology. Allow technology to allow you to work smarter, not harder, and manage your finances in a more efficient manner. And then growth, right? At the end of the day, what is your end game? Why are you even doing what you're doing? Hopefully it's for financial growth. Hopefully it's for financial wealth, right? And so we need to be able to interpret our numbers, our income statement, our balance sheet, our cash flow statement. We want to go ahead and maximize our income and minimize unnecessary expenses. We want to be able to work with our professionals, our advisors, our financial team to tax plan and strategize. And what do we want to do with that? We want to save on taxes and possibly defer taxes, right? We're not talking about evading taxes. We're talking about being strategic around taxes. And again, choosing that best accounting professional or financial professional that can grow with your goals. And why is it important to know both real estate accounting and general accounting? Because knowing both provides you the financial literacy and the clarity to organize and manage your business based on your needs. Everybody is different on this call. We proved it right now with the poll. So we want to make sure you have the literacy and the clarity based on what you're doing in your business. And what does it gain for you? What is the winning? Why are you even here? You're going to gain the ability to be able to make decisions on your financial profitability, on your personal profitability, on how you want to grow next, on saving taxes and deferring taxes and staying compliant on your obligations. You're going to be able to set goals and achieve your goals, right? And at the end of the day, you're going to be able to secure a stronger future for yourself, for your family, and for your loved ones. So we're going to go ahead now and talk about the common real estate profiles that we hear all the time, or at least I hear, because as a financial professional that's focused in the real estate market for almost a decade now, I've been doing this for 2 decades, but I really have focused in real estate over the last decade because I really have a passion for all of you, number one. I really believe you are incredibly passionate, incredibly hardworking, but sometimes you struggle on the accounting side. So I have taken a big effort to try to help real estate professionals. And so these are the 3 main profiles that I have come across. The first one is the real estate agent, right? The real estate agent assists with buyers and with the buyers and sellers of the real estate. A real estate investor, they buy and hold real estate. What's most important when it comes to real estate investors is that their intent is to hold that real estate long term. Now we have our real estate flipper dealers. They buy and fix and flip real estate. So their intent is to hold it in the short term. That is so incredibly important. What I just said is what their intent is, because right now, particularly the tax code around investors and dealers is still a gray area, and it's really based on the intent. What was your intent when you purchased that property? And, there's many techniques on how to go ahead and document that intent, whether you document somewhere in your minutes, if you're a corporation or a partnership, if you document it every time you buy a property and you document it, let's say on the settlement statement, in your accounting solution in your QuickBooks. If you purchase it, a lot of my QuickBooks clients will purchase the property, and when they buy it as an investor, they'll put the property address and they'll put -I because they bought it as an investor and they're going to hold it. When they buy a property they're going to flip, they'll call it an address -F or -D because it's a flipper dealer property. And so you really need to make sure you're documenting your intent. Let's go a little bit more detail on the typical items or discussion topics when it comes to each profile. So when you have a real estate agent, right, mostly their discussion is, okay, so how do I get my accounting together? How do I organize my paperwork? How do I make sure to capture my income correctly? How do I get the most, be able to qualify for the most expenses, which may or may not be deductible, because, when you pay for an expense, you are spending for that business expense, but you're not sure whether you qualify as a tax deduction. And why? Because the tax deduction is based on the tax code. So whether or not you spend is one thing. You can have tons of business expenses. You qualify for the tax deduction based on the tax code. And so these are the very common topics I get asked, or the items. I have sales commissions coming in. How do I document that? I have all these costs related to the sale of that property that I have to go ahead and pay out. I have to market and brand myself. I use my personal business for my real estate business. How do I go ahead and capture that? How do I capture my mileage? I take out my clients to eat. Do I qualify for the meal deduction, right? We all know, or hopefully you all know, that the meals and entertainment law changed dramatically from 17 to 18. There's no more entertainment deduction now, only meals, and meals has changed as well. So you want to go ahead and find out what that is. Also, many real estate agents may be sole proprietors, or they may be S corps. They may be a sole shareholder of an S corporation, which means what? Which means now they are an officer employee of that corporation, so they need to put themselves on payroll. So now they ask me questions about payroll. So these are all questions and discussions that are incredibly important for real estate agents. Then we have our real estate investor. This is the individual, the professional that has the intent to hold their purchase long term. What do I mean by that? Well, when they purchase that property, they're most likely going to rent it, right? So now the discussion is around rental properties. How do I capture my rental income and expenses? How do I deal with repairs and improvements? Do I need a property management company, and how do I get one? But if I have a property management company, what type of documents should they be providing me with, right? How do I deal with security deposits? My rentor comes in and I asked him for $1,000 security deposit. Well, remember, that deposit is not your money. It's going to be returned to the client, to the renter, to the leasee, right? And so you want to go ahead and be capturing that in a specific account so you can pay it back to your clients. But most importantly is that a real estate investor's intent is to hold that property long-term, which means that purchase is a long-term asset, and which means when they sell that asset, if there is capital gains, if there are profits on that sale, it's taxed at the long-term capital gains rate, which is lower than our ordinary income tax rate. That is the most critical area that you need to learn, that you are going to be taxed differently based on the intent of that purchase. Okay? I got to say that again. You are going to be taxed differently based on that intent of that purchase. Now, let's talk about our flipper dealers. Wow. I have been working with flipper dealers for several years now, and I got to give them credit. They got a lot going on. There is so much paperwork, and it's happening at like Speedy Gonzalez speed. Very, very fast. A lot of stuff is going on. And they need to really stay on top of their documentation because there's just so much stuff going on with their paperwork, with their documentation, with the buys and the sells, with the buy and selling of the properties. So these are your fixed and your flippers. Okay. They are hiring contract labor really, really, heavily because they're trying to fix and flip, right? They're trying to get that property nice and good and ready to sell. They're having some holding expenses. So for instance, if you are an investor, you may be doing some expenses for your properties that are long-term. Maybe you told your leasee, your renter, I'm going to go ahead and pay for some utilities. Obviously, you got to pay for property taxes for that property, homeowners insurance, HOA dues, but you're doing that every month and you're paying for that every year. Well, remember, if you're holding a property, even if it's for 6 months, somebody needs to pay those utilities. Somebody needs to pay those HOAs. Somebody needs to pay those property taxes. And so the flipper dealers have the same expenses as the investors, but it's quicker. It's faster. And so that's why I call them temporary expenses, because they may only be paying those utilities for 6 months, 8 months until they're ready to flip that property. Also, some really heavy context around flipper dealers. Many times they use lenders, private lenders, and so they have to pay a cost of capital to go ahead and inject capital quickly into their business so they can fix that property. Then they have to sell that property, and then they have to pay back those private lenders. So again, a lot going on in the flipper dealer. Now, I'm going to pause because I really want you to see and hear and feel my intention on what I'm going to say right now. When you are a flipper dealer, your intent is to hold short term, which means that your profit is going to be taxed as ordinary income. Oh my goodness, what is this? Sorry about this. This is not supposed to be coming on. I don't know why that came on. Sorry about that. So your property sale, so your profits is going to be taxed at ordinary income tax rates. That is huge. Why? Because that's higher than capital gains rate. And so again, you have to understand and know and be very, very clear on the intent of that purchase and document that purchase. Because let's say you decided to start as an investor and then go to flipper dealer. Well, any properties that you end up selling as an investor, you're going to be paying taxes from the capital gains rate. But any properties you're going to sell as a flipper dealer, you're going to pay the ordinary income tax rates because you are in the ordinary business, trader business of buying and flipping homes. That is an ordinary trader business. That's not long-term. That's not passive. And so this is incredibly, incredibly important, everyone, that the intent to hold short term will have you pay taxes on the ordinary tax rates, and you may also be subject to self-employment tax because as a sole proprietor or as a partner that's doing self-employed businesses, you are going to be taxed the self-employment tax. Okay, I know this was a heavy slide. That was intentional because there's a lot going on this slide. Again, you're going to have access to this afterwards, and you're going to also have access to this recording. And the one other thing I wanted to go ahead and provide as a resource is there's a woman by the name of Lisa Puerto, and she is an agent and also has an amazing podcast called Ready, Set, Real Estate. And I was on a 3-part series with her last year, October, November, December, where I actually covered in depth each one of these profiles. So you can find that series on my YouTube page. So how is everybody doing out there? So now that we know our profiles and now that hopefully you can identify a little bit better with your profile, we're going to go ahead and talk about preparing for tax time. So the small business accounting workflow from books to taxes. This is where I was talking about what every business owner needs to know. So I'm going to cover not only what you need to know as a real estate professional, but every business owner. So this relates to everybody. So what is the small business accounting workflow? Basically what it is making sure you're completing all of your accounting tasks, then preparing your financial reports accurately, and then reporting all of that on your tax returns. That's it. That is the small business accounting workflow. It's that simple. With my platform, my entrepreneur platform, both on tustresmaestras.com and on Master Your Books, we have classes that go in depth into the small business accounting workflow. So if you're interested in that, feel free to connect with me and I can go ahead and talk to you about when that next class is. But we go in depth on that workflow. But just to tell you what it is, it's just making sure that you're completing your accounting task, you're preparing your financials, and you're reporting it on your tax returns. And how do you complete your accounting test, right? This is what we call the books to tax life cycle. This is the life cycle to basically take you from your books to prepare your taxes. You, number one, have to manage your books. And now when I say you, I would love for you all to find some rock star bookkeeper, financial accountant, tax pro to help you. But if you can't, or if you're not in the situation to find somebody, we all know on this call, we're all business owners. I'm a business owner as well. We all need to do what's in this books to tax life cycle. We need to manage our books. We need to manage the money in and out. We need to balance our books. We need to match and analyze and make sure that everything has been ticked and tied. We need to maintain our books in real time. And in accounting, technology and automation allows us to do things in real time. Being able to work mobilely allows us to do things in real time. And at the end of the year, we close our books and we file our taxes. And let me tell you all something. When you're doing manage, balance, and maintain, closing is the easiest part. It's the simplest part. It's like running a marathon, and all you got to do is just cross that finish line. You're literally a few feet away, and you just reach over and you cross the finish line. That's what closing is. What happens, unfortunately, is that we all try to manage, balance, maintain, and close all at the same time. And we need to stop that vicious cycle. Now, we're going to cover just a few tips on preparing your financial reports as a tax professional. So I'm just going to cover a few tips that I find that are very common when it comes to not only small business owners, but specifically financial real estate professionals. So, they'll get different types of cash inflows, bank deposits that come in, and they'll take this, this information. Let's say they print out their bank statements, or they go ahead and give their accountant access to the bank, and they go, oh yeah, all my deposits is income, and all my expenses, or all my withdrawals, or my debits, or my checks are all expenses. Ladies and gentlemen, that's completely 100%, 110% wrong. You cannot say that every single deposit is a cash inflow and that it's income until you've gone through every single one and confirmed that. Those deposits can be loans. Those deposits can be owner's capital, meaning you're injecting capital into the business. Those deposits can be a refund of something, or they could be income or commissions. So you need to go through and make sure you're notating that. When you get your 1099 miscellaneous at the end of the year, that may not match what's in your bank. That may not match the total commissions you received. Why? Maybe when you got submitted that 1099 to you, the person that submitted it, the broker, they actually gave you a net 1099. What does that mean? Well, many times a 1099 is net of other expenses. Maybe it's net of your desk fees. Maybe it's net of errors and omissions insurance. Maybe it's net of something else. And so when you're looking at it, you're like, wait a second, my 1099 says $35,000. I know I brought in $50,000. Why is that less? Because they gave you a net 1099. And so you need to go back and troubleshoot what that difference is. Property management reports, the same exact thing. Your property manager goes and deposits that net rent received. So let's say you go ahead and you bill $1,000 rent to a rentor, but that property manager gives you $800. You're like, wait a second. It's $1,000 rent. It's very clear. Why is this wrong? Because maybe the property management company is taking out their fee. Maybe they're taking out other expenses. And so you get $800 even though the gross rent was $1,000. You need to go ahead and reconcile that and make sure that you're documenting the right numbers. The IRS gets specific forms from all of you. They get 1099s from all of you. They get 1098s from your mortgage company. They get W-2s and payroll tax returns from your payroll companies. So when you are actually preparing a financial report, you need to make sure what's getting sent to the government is also matching your financial reports. Those are called audits. You need to audit your information. Now, you may be completely overwhelmed and saying, okay, you're going way too much here, Mariette. How do you expect me to learn this? I don't expect you to learn this today because this is financial literacy, what I'm talking about, but I would love for you guys to see the importance of connecting with someone that can teach this to you. You can watch a class. You can join a masterclass or a boot camp. You can hire a financial accountant that many times we're also trainers, and we can teach you this stuff slowly at your own pace. You want to make sure you're recording transactions from third parties. So remember, many of you in the real estate industry use escrows, you use impound accounts, you have settlement statements, and on those statements and in those accounts, there's a lot of moving pieces. It's not just one number coming from one statement. We all know that settlement statements could have 20 or 30 plus line items. So you need to make sure that you're looking at all those line items and you're documenting those line items correctly in your financial reports. Your tenant balances, are they correct? Are you looking at the end of the year and saying, hey, Jennifer, why does it show me that she still has a balance? She's been paying me rent every month. What's going on here? So you want to audit those tenant balances and make sure that you've been applying all the payments correctly. And also, how are you applying all those security deposits? I mentioned that earlier. Security deposits are not income to you. They're actually assets. They're assets that you're holding on your balance sheet until you have to pay those back. Excuse me, they're liabilities. So learn how to post and purchase. Excuse me, I have to fix that one. Basically, learn how to post the purchase and sell settlement statement. So this is the number one question I get from real estate professionals. How do I post that settlement statement? All I see is this big, long, legal-sized piece of paper with a debit column and a credit column, and I'm freaking out. And so we need to learn how to post that settlement statement. It's not that scary. There's a couple of really cool YouTube videos out there. One of my friends by the name of Seth David, he has a YouTube video that's called How to Post a Settlement Statement using QuickBooks Online. There's another gentleman out there, I believe his YouTube YouTube channel is called Income Digs, and he also talks about that. Mark Kohler, he's another CPA and tax attorney, focuses a lot on the real estate industry. I'm pretty sure he probably has one, and I am in the process of creating a video on that as well. And then also knowing that there are ways for you to classify your sales by property. In QuickBooks specifically, there is a feature called classes, which allows you to see your profitability by property. Many times you're looking at your business just in totals, but if you are investing and selling, or if you're flipping and selling, you need to be looking at your business not only in totals, but also by profitability by property. And QuickBooks allows you to do that. Okay, this I'm going to go through a little quicker for two reasons. These are just this is just a checklist on what you need to do at the year end. It's called my year end checklist, and I actually have a video for all of you that you can watch afterwards. So let me just go through the different areas. So you want to capture and classify all your activity. You want to record your business expenses, especially those that you use personal funds to go ahead and spend on your business. As I mentioned before, you want to audit all of your accounts. You want to deep dive into each one of your financials. Again, I was telling you about audits and reconciliations. Any kind of owner transactions you've been doing, you want to make sure that you're capturing those. If you're an S Corp, they're called shareholder transactions. You want to prepare, as I mentioned before, the tax forms to stay compliant, like your W-2s and your 1099s. And you want to review your financials in depth. Now, you're getting ready to prepare your reports for taxes, meaning you're going to send them to your tax professional. You want to make sure you send it to them in the right tax basis. You want to provide them with an asset list for depreciation calculation. If you're trying to get the auto expense, you cannot get it without a mileage log. You want to make sure that you have all your documents stored. You also want to make sure that you provide your tax professional with the current ownership information. You want to make sure that you're matching your tax returns line by line with your reports, your financial reports, and your tax pro is going to provide you an adjustment list of adjustments that you have to go back and make into your books. You want to make sure that the year end for 12/31 of 18 matches to 1/1 of 19. Then you want to close your books and password protect them. So right here you see there's a link. I have an actual full-blown video on every single one of these items and how to go ahead and deep dive into them, so you can watch that on your own. Okay, so now let's talk about organizing your documents to prepare for taxes. So as I mentioned before, this is a lot of stuff. I understand that. This is tons of information, and it could be very overwhelming if you're trying to do this on paper, or you're trying to use your bank statements, or you're trying to use an Excel spreadsheet. And so we want to take you from the bank statements and the shoebox to a cloud storage like ShareFile or Box or OneDrive, and then we want to take you to an electronic accounting solution. So where do you get started? The first thing you want to do is you want to have a folder structure. So these are two examples of what folder structures may look like. Now, you may be like, Mariette, are you crazy? I don't have everything in a cloud storage, and I don't have it all labeled 1 through 12. I get that. But remember, ladies and gentlemen, this is what I do for a living, and this is what I teach my clients, so that way they can stress less. I want you all to stress less. And so if you're a real estate professional, this is what I show my real estate professionals. Just go ahead and create just literally a folder in Dropbox or in Google Drive, and just label them 1 through 10, 1 through 12. And then what you can do is two things. Some of my clients, and that's why I have this highlighted on the top, they may just have one folder and they just call it 2017 and they stick everything in there. Is that the best? No, because they're going to have to go back and organize all that. But is that one way? Yes, it's one way. I would prefer you guys go and number them and go ahead and say all of my receipts and my documents around sales is going to go to box, into folder 1, expenses into folder 2, and go on and be more organized. It's just going to help you in the long run. Now, this is an example of an investor dealer. Now, if you can tell, I just went ahead and highlighted a couple of the boxes that are different. Remember, investor dealers are needing to capture purchase information, purchase docs, escrow docs, property income, property expenses. Are they contracting labor? They need to capture all of those 1099 vendors. And so I just want to let you all know, you need to create your own folder structure that makes most sense to all of you. And that's what I say right there on my tip. Folder structure should be based on your accounting profile and your operational workflows. Okay, so let me just give you 3 simple ways to go ahead and track all this information, right? Because I've given you the context of identifying with the real estate profile. I've also given you the importance of completing your small business accounting workflow, right? Very, very important. Now I want to go ahead and give you some options to catch up, right? You can go ahead and create a manual ledger. Not that I'm recommending that, but you absolutely can do that, okay? You can go ahead and use the good old spreadsheet, right? Many of you like Excel. The issue with Excel is that there's still so much manual reconciliations you have to do. Or you can use the easier and electronic automated way, which is an accounting solution like QuickBooks. So let's finish with a bonus round. So what if Sophia needs to catch up on an entire year of accounting? This happens all the time. Mariette, I'm super excited. I just watched your webinar. I attended your training. I'm totally in agreement that I need to catch up. Am I totally messed up? Is it too late for me to get myself in a good place? And the answer is absolutely not. It's not too late. So what are Sophia's options? The first thing she can do is she can use Excel. If you used Excel to catch up on accounting, these are the steps you'd need to go ahead and take. You'd have to collect all your documents, all your statements. You'd have to download all your transactions into Excel. You'd want to go ahead and categorize them all in Excel. So put them into categories, want to sort and organize them, and then essentially create a manual profit and loss in Excel. If you use QuickBooks Self-Employed, if you're a simple Schedule C filer like Sophia, all of that is done automatically. You're essentially going to just bring in those banks and those credit cards and then categorize them. And most importantly, you're going to separate them between business and personal. If you use QuickBooks Online, because you have a need for full general ledger accounting and financial statement reporting, then you're going to essentially do the same thing you do with Schedule C, QuickBooks Self-Employed, that same exact process where you're going to upload the bank feeds and categorize that. All of that is beautiful and simple and easy, but you're going to have much more robust reporting that you can do in QuickBooks Online than you can do on QuickBooks Self-Employed. And that's why it's critical that you know which is the right solution for you. Is it self-employed or is it one of the 4 versions in QuickBooks Online? And last but not least, I want to leave you all with the top tax deductions for real estate pros. And these are just some top tax deductions that I get asked quite a bit from real estate professionals. And these are just some strategies that you can take and you can discuss with your tax professional. The other thing I wanted to go ahead and mention, I mentioned quite a bit my YouTube channel. The reason why I did that is because I have an entire channel on real estate accounting. So if you actually went to my YouTube channel and you looked up real estate accounting, the playlist, you're going to have several videos that focus on real estate accounting, in addition to that 3-part series I mentioned with Lisa Puerto, where I go ahead and deep dive into each profile, the investor, the agent, and the flipper dealer. So I just want to make sure you all know where that is. All right, everyone, thank you so much for being here, and I look forward to connecting in my next training. Bye-bye.